Okay, let's get into the stock market technical analysis. I'm going to go through mostly the large cap tech stocks. We've got earnings coming out, really a handful of earnings on Wednesday. I believe there's some on Thursday and then next Tuesday. And then Nvidia is a little bit later. But and that Nvidia is going to be the big one, of course. But so we'll look at the tech stocks. A couple other trade ideas, and I'll wrap up. So drop me a thumbs up. I do appreciate it. It does help the channel, and I'll keep pumping out the content as long as you guys keep following. And then additionally, if you're interested in the private member group, I've already put out several trade ideas, one on Nvidia, one on Apple. There was one other one this morning and gave the charts and the key levels. So link in the description below on that, $5 a month. Cancel anytime. So it's at most it's going to cost you $5. Okay, so triple Qs, and link in the description on that one. Triple Qs, not a whole lot because triple Qs is because of those earnings, but we did have this uptrend line here. It broke, and in general, basically, the bearish rising wedge that has been in play here, that's still in play. The widest part of the wedge does send us down to about. It's 478.50 is the measure target and the 200 day. So I still see that in play, whether we rally a little bit more or chop around, because the tech earnings is going to move this. So we can kind of bounce and break and chop around. The trend though should over time be down to that key level of support. All right. So that's where I think we're heading. I think that it will work its way lower, whether we kind of chop around leading into these earnings. I do think we are heading lower. And that's really it for the triple Qs. The negative divergence is still intact. We're just coming off of a large divergent high right here. So in general, I think we are headed lower, all right, in the tech sector. Now, when I look at the individual stocks, obviously Nvidia, so let me go to that one. Nvidia had the big negative report, so everybody knows about it. I was traveling this weekend, and I was traveling yesterday, so I posted the chart to the private member group from my phone, but in general, we were falling right to the 200-day moving average. They did undercut it briefly. I would expect that because 200 days is such an obvious level. You got to run some stops. So in general, there you go. You run the stops yesterday and today, and then the buyers step in. And that's what I was expecting. So that's kind of what I told the private member group. We haven't hit the 200-day on Nvidia since, we haven't really been testing it since all the way back here back in December of 2022. So over 2 years, a little bit longer basically, we haven't really even tested it. So that's the first tag of the 200-day in over 2 years. Yeah, you're going to have buyers. It's like almost obvious. If you don't have buyers that are buying the 200-day after 2 years of testing it, there's something really wrong and something really broken. So keep that in mind. Now we are seeing that bounce. The big picture though is I've got some resistance. This was former support all through here. We had 3 distinct reactions. We had one there from as resistance. So that should be resistance now. It's about 129.50-ish. That should act as resistance. And I believe the sellers will step back in right there. So watch that key level. Obviously, if you break above it, then yeah, you're probably going to go on to make new all-time highs. Now, the other thing is we have this uptrend line coming off the October of 2022 lows. So that has been our uptrend in Nvidia, and that's clearly broken. All right, it broke. We had the sell signal back here. You had a back test right here. I pointed out all these key levels. The back test was impulsively rejected with that big red candle. So that's a clear sign that the sellers are selling at resistance. It's a sell to rip market, and sure enough, you rip, they sell it. Okay, you rally up, they sell it, but they sell it with a big gap down. So you're trending lower. Okay, so that's what's actually happening. Doesn't mean we're going to just crash and go straight down. I know if I say we're trending lower and we have a couple of days where we rally, the trolls come out and say, oh, Maven right when he comes out in post is when it goes, is when the bottom is. No, I typically try to anticipate kind of the next move. So yes, we hit the 200. I think we are going to rally up to about, that level, maybe overshoot it a little bit. And then I think we could go lower. Could do another back test. All right. That would be way up here. That's possible. I don't think it's likely. We've already had a back test with a really distinct rejection, and we've made a lower low. So the trend is lower highs and lower lows right now. So I do believe that is actually the actual trend. So I'm looking for the rejection at that 129-ish area. And then back down to the 200. Again, they'll probably battle it a little bit more because they're probably going to try to hold that 200. It'll be a battle for a while. But once it's clearly taken out and you don't just get kind of like a one-day whipsaw below it and then snap right back. Once you start getting daily closes below it, then it's clearly taken out, and this thing should pretty much implode down to lower levels. I've got the level down here. It's about 75.80. I like that as the target, and that would be from the highs. That would be a drop of about 40, or no, more than that, about 50%. So that's where I think it's heading. For now, that's kind of my final target on this move down. Okay, so that's Nvidia. Tesla, they've got earnings coming up on Wednesday. Tesla has, I don't see real clean negative divergence on Tesla. You recently made new highs. Momentum seemed to be there as well. For me, this is not my favorite chart. It's not clear where this is going to go on earnings. So could pop up and put in a new high. Maybe that will be a divergent high. I can easily see that pop up, put a new high, and then build that divergence. At that point, we'll be looking for sell signals, or could drop down to this support area, which looks to be kind of this uptrend line. I've got it marked in blue. It could be dropped down to there in the 200, hold that support, and then rally from there. So I'm not going to take a trade on that one into earnings. It's not clear, so we'll move on. Apple. They've been buying Apple as we've kind of, we kind of came close to the simple moving average. I believe it hit the exponential moving average, and they stepped in and bought. Also, is at support. So again, that looked like a pretty good area where it would bounce from, but now it's bouncing into resistance. You can see resistance. They've overshot it today. I think this is resistance. It's a zone of resistance. We're either going to get rejected here, or it could come up and backtest this trend line right there. You can see there's a trend line. So it could go a little higher, but for me, it's a zone of resistance and we're in it. We've kind of, got close to that trend line. I've started to short this thing, and I'm looking for a move back down to the 200-day moving average. And then ultimately I'm looking for it to break, but that also, for now, back down to the 200. Once it breaks the 200, that'll be another sell signal. It is right ahead of earnings. Earnings is on Thursday, so it's an elevated trade. It's elevated risk. So the way I mitigate that risk, because the risk is higher than normal, given that we have this earnings event, is I take a smaller position size. So for me, small position, nothing that's going to really hurt me too bad if it goes against me, and nothing that's going to really make my day if it goes for me. But at least if it goes the way I think it's going to go, the way the charts tell me, because we do have negative divergence that's been kind of building for a while. You can see it here on the PPO. There's the negative divergence. Then I'll have that kind of entry position where I can start to build, and add on to it as we hit objective levels. So that's Apple. Microsoft is reacting, bouncing. They bought the 200-day right there, so you're bouncing off of that. And Microsoft does kind of chop through the simple moving average a little bit, but they bought it. You're also holding this uptrend line here, and there's nothing really wrong with this picture. I don't see any real signs that this is a short. So this is if anything, the only real trade is a long. You buy the 200 until it fails. That's really the only trade. There is no real negative divergence either on this one. Actually, I think we've pointed this out before, where you've got kind of momentum is dropping off, but price was also dropping off. So it's really more of a isometrical triangle, kind of a compression pattern, and it can break either way. It's kind of a 50-50. It can break, if it breaks the upside, that's the next trend. If it breaks the downside, that's, you just take it for which way it breaks. There's no divergence telling me that we are, that this is bearish. So yeah, mixed signals on that one. Meta, this one looks like a stop raid. Here's a big bearish rising wedge. All right, you've got negative divergence, big negative divergence, and they're popping it up to the upside right here, breaking out from the bearish rising wedge. But again, this is a divergent high. All right, this high that we're making today is a higher high in price but lower high in momentum. Not fully confirmed. If we keep going up, we can burn through the divergence. But as of now, it is a divergent high. And it's right ahead of earnings on Wednesday after the bell. So a breakout like this, that's with this big bearish pattern, bearish momentum. This thing has had bearish momentum that's been building and extended for quite a while. So that's why this looks like a stop raid. All right, they pop it up right ahead of earnings and then dump it on earnings. So I'm anticipating a gap down after earnings on that. That's what the chart tells me, and the price action. The fact that they're rallying it up right ahead of earnings, running a bunch of stops. If you're short this thing, you're feeling the pain as they rally this thing up and they're running stops, taking shares, and then they'll dump it after earnings. And I'd be looking for, the major target of this wedge sends us to, it's a decent breakdown. Depending on it, let's say we break down on earnings somewhere down around this level, 424 or so. We also have some support right there at 454. So I'd be looking for a move pretty much down to the 200-day moving average. Okay, and then you should bounce there. All right, I think you get a bounce there, maybe even a back test of the wedge, and then down to the measured target. So that's kind of that's how I'm viewing that one to go over time. It's going to take weeks to months, basically. Google, this is Goog. We can also look at GOOGL, but you can see we've been making a series of kind of higher highs in price. Momentum, though, is clearly diverging. So negative divergence now in Google. Doesn't mean that it's a short, okay, because you can burn through the divergence. You can make a new high. Divergence can continue to extend. So it doesn't tell me, hey, short this thing just because we have the divergence. But it does tell me the conditions are there that we are going to likely reverse and head lower. So now I'm on the lookout for a sell signal on that one. Earnings coming out next Tuesday. Potential trend line here. I only have 2 reaction points, but there's a potential trend line. So things to watch. And then also your former high. That's your former high. We've broken out, but it's a diverging breakout. So it tells me this is topping price action up here. And we're likely going to head back below those former highs and head lower. So that's what I'd be looking for on that one. And then Amazon rallying into resistance. This also has a bearish rising wedge. This can continue to form. All right, we're not at the full apex of the wedge, but we are at what looks to be resistance. All right, right now. So resistance on the apex of the wedge, support down here on the daily. So I would, I don't know which way it's going to go on earnings. I think it makes sense to just wait for the earnings to clear on this one on Thursday. But I suspect, next week likely will be heading down towards the support zone. Whether they, because they might pop it up here on earnings and then sell it down. All right, that's always a possibility. So that's what I see on that one. Oh, just want to go back to Nvidia real quick. There is something to kind of take note of, and I do want to look at Broadcom as well. But Nvidia, again, you had a breakout. You had some former highs, but basically big sideways price action. I talked about this looking like topping price action. It looked like kind of a top because you had negative divergence that was just continuing to extend, and yet we just continued to kind of pop up and make new divergent highs, chop around, looked like topping price action. And sure enough, now I think that's confirmed. I mean, until we get a chart, until something changes with this big gap down, you've trapped all the bulls, anybody who's been bullish, who's basically been buying this 130 support, you've trapped them into the longs. And this goes all the way back to October. So early October, anybody who's been buying Nvidia is now trapped into losses all on a 1-day gap down. So that's a big impulsive move down. It traps those longs. Unless they're bailed out, and these longs are going to become sellers. All right, they'll become panic sellers when the price continues to move lower on Nvidia. These longs here are going to feel the pain of the losses, and they're just going to say, I'm going to get out, and they're going to exit, and they're going to create selling volume, which fuels the downside move. So we have fuel. If you're looking for downside on Nvidia, which I am, then there's fuel that's there. It can, there's trap longs that will become sellers, and that's what you need when you're looking for downside. Is you need sellers. You need people willing to sell at lower and lower prices. So the that's kind of what we got. Now, if we rally, and that also creates a wall of liquidity right about there. All right, because if you've been buying at support, which is what you should be doing if you're a bull, you buy at support, sell at resistance. So you've been buying here, as with the big scare yesterday, as we approach that level, then those longs that have bought at support start to get their money back. And I suspect today at 6% rally or a relief rally, you're seeing some of those longs start to exit with smaller losses. They want to just say, I'll just take the loss and get out. And that creates that wall of liquidity where you have a wall of sellers. And that's what we have right now. So unless they can recover this level and really get a daily close up there, then that is resistance, and that's where your wall of sellers should be at. And again, I'm looking for lower prices here on Nvidia. We're looking for, I showed you my final target. So that's that one. And then AVGO, Broadcom, kind of another semiconductor. We've got we've got an island cluster top, okay? So look, you gap up, you trade up here for a little bit, and you gap down. That's an island cluster top. You've trapped the longs on the island, and that's a sell signal, all right? That's a trending top. It's not just a 1-day top. It's essentially saying, what these essentially do is you look for them at the end of extended uptrends. I'd call that an extended uptrend going all the way back to October of 2022. We gapped up and gapped down, create the top. So that tells me that we're in for this is a trending uptrend. We're in for a trending downtrend. Okay, so I'm looking for lower prices, and this uptrend should break. Now, I do think we're probably headed down to the trend, or right about here, 185-ish, right in that level. That looks like pretty decent support. So I think we're heading down there. We might chop sideways. We could even rally here a little bit, maybe rally up. Let me grab the tool. Could rally up, act like you're going to fill the gap, but then come down, boom, hit that support. Probably get a rally there. But I don't think that rally is going to go too much, and then ultimately this trend breaks. So if you're looking for the trend trade, I would just, I think you could be short here. You're probably going to get some counter trend moves against this gap down a little bit, but what you just really wouldn't want to see is a daily close above the top of the island cluster. That's your stop out. All right, and otherwise, you can just continue to hold that as a trend trade lower and look for lower prices. So you stop out up here, daily close, give it a little room. You don't want to be right there, pennies away. You start creeping over there. Again, it's a daily close too. It's not just intraday, but on a daily close above, you want to have a definitive break above that with a daily close. Then you stop out, and that's that's that trade. So that is what I see on that one. target on this, I mean, it can go quite a bit lower, especially if you're going to break trend. I'll probably have to kind of dial it in. I see looks like there's a level right around here at about 141. Looks like a level, but again, I think we're probably heading lower than that. That might just be your first target on a trend trade lower. This could take, a year or so to kind of unwind a little bit this big rally as it trends lower. Bonds, TNX. This is your interest rates. Very, very key. Right now, the market, like I said, the market only cares about two things, and I've talked about this over and over for quite a while. The market is trading on two things: AI hype, AI bubble, essentially, and interest rates. And that's it. That's all the market cares about right now is AI bubble. So pump the AI bubble any way you can, and interest rates. All right. So we're starting to see the AI bubbles. We've kind of seen that shot across the bow on the AI bubble, and the money. With that Nvidia implosion and the money. The longs kind of being trapped. So we're starting to see that break. Same with the AVGO. And, you can look across the board on the semis. And then we have interest rates. So if the AI thing continues to implode, interest rates need to fall in order to keep the market up. If interest rates don't fall, then the market should continue lower. So this is your 10-year. You've got support, and we're coming down. I think we might come down and hit it, this trend line. So maybe a little bit lower in interest rates. We don't have to, but that would be the area I'd be looking for a reaction, for a bounce. And then I do believe interest rates can continue higher. Okay. So that's what I'll be looking for there. I think interest rates maybe come in a little bit more, and then, next leg up in interest rates, which should put pressure on the market. So it's very likely here's my outlook on interest rates. You go back, this is the high right here, the cycle high. Right there, it's about 5% roughly on the 10-year. I think we're going to go pop above that. We're going to bounce off this support and continue to rally, pop above that former high. Probably put in a divergent high. It'll probably be negative divergence when we pop that high. The market's going to panic because interest rates are spiking, and you're going to see stocks come in quite a bit. And I showed you the charts where I think like Nvidia is heading, and I think they're coming down. And then as stocks start to come in, money's going to move out of stocks and into bonds, and then ultimately you'll see interest rates start to come back down. Okay, so run up, pop, spook the market, money moves out of stocks into bonds. As they buy bonds, interest rates come back in, and then we'll reset and we'll see where things are at. But that's what I got on the 10-year. So then you've got sectors, interest rate sensitive sectors, which again, this week, I can't stress enough, very volatile week. We've got the Fed on Wednesday. We've got earnings. It's a very volatile week. So the charts can give us a look, right ahead of all this stuff. But a lot of that can be whipsaws or fake outs because of the volatility that's very likely going to be there. XHB is at resistance. We've got this kind of key level here. It's also the 200-day moving average. This is your home builders, very interest rate sensitive. We're at resistance. I think we can chop around here a little bit more. But ultimately, you start to see interest rates rise. You're going to see this get rejected right at this level. That's what I'm anticipating. I think we get rejected at this level, and we head lower in XHB. I think what's going to happen is the Fed's going to come out dovish, and they're going to come out dovish, signaling that they might drop interest rates. And at first glance, that will be, the market might react and say, well, that's really bullish. But here's what's really going on. You look at the TLT, and the Fed, here's where the Fed started their interest rate cut. All right, their cutting cycle. They were raising interest rates, but when they started cutting interest rates, it was the September meeting. It was literally, I think, to the day right there, the high. And the long bond, the Fed controls the short end of the curve. All right, those 4-week T-bills, the 1 month, the really short end of the curve is where they have influence. The long end of the curve, like this, the 10-year, the 20-year, is controlled by the market. It's investors saying, okay, are you going to inflate away the value of my long-term bonds? And that's what the market says. Yes, you're going to inflate away the value of my long-term bonds. I need a higher interest rate for that, for taking that risk. So when the Fed started cutting, TLT has done nothing but drop since that point in time. And that means interest rates have actually risen, all right? Where everybody borrows at, which is, consumer debt, consumer lending is pinned to the 10-year, all right? It's auto loans, credit cards, all that kind of stuff, mortgages. It's pretty much pinned to the 10-year. And so consumer borrowing has gotten more expensive, even though the Fed has lowered the interest rates for what banks can borrow at on the short end of the curve. So that is essentially been, it's been, should be bullish for banks. However, I don't think consumers are able to actually borrow at these higher rates. So I don't think the banks are making the loans the spread's better for banks, but I don't think they're making the loans. But going back to what I was saying, if the Fed comes out dovish, the trend has been Fed dovish, long bond doesn't like it, higher interest rates. And so if the Fed comes out dovish again saying, well, we need to cut rates more, the initial reaction, the algos might snap it up, but I think that's a sell the rip, because I do believe you're going to see the TLT continue to drop, which means you're going to have that spike in interest rates. And that's the trend. All right. The trend is Fed dovish, interest rates higher, which is, kind of counterintuitive. But in general, again, it all really comes down to the market anticipating more inflation in the future and demanding to be paid for that risk. So that's my outlook on everything right now. I'll get this video out there, kind of a bunch of, just ramblings on everything, but it's backed by technicals. So I will get it out there and